The European Central Bank recently reported that gold has now surpassed US Treasuries as the world's largest reserve asset held by central banks. That's a major shift in the global financial system. Many countries no longer want to rely entirely on paper currencies or dollar based reserves. Instead, they are turning to gold because gold carries no counterparty risk, cannot be printed by governments, and has preserved wealth for thousands of years. And historically, central banks tend to move early. They often position themselves before major economic transitions become obvious to the public. That's why many investors and retirement savers are beginning to ask an important question: should we be paying attention too? For many Americans, physical gold and silver have become a way to diversify retirement savings outside of traditional stocks, bonds, and paper assets. Gold has historically performed well during periods of inflation, currency weakness, banking stress, and economic uncertainty. And unlike fiat currency, physical precious metals cannot be created out of thin air. Some retirement savers are even using gold IRAs to hold physical gold and silver inside tax advantaged retirement accounts. The reality is simple. When central banks are buying gold at record levels, many investors believe it may be wise to understand why. Because the people managing the global financial system are clearly preparing for something, and smart investors are paying attention.